Good morning, members of the media. Let me welcome you to the SC's annual report briefing for the year 2014. We are going to present to you this morning the key points from the capital markets performance for 2014 and share with you our focus areas in relation to regulation as well as supervision, enforcement and development. And we'll also briefly share with you some of our priorities for 2015. As you're aware, the SC's primary role is to be able to ensure that our capital markets operate in orderly manner with the trust and confidence to allow capital formation to occur, which is extremely important for the financing of the economy. Companies must be able to access the capital markets to be able to provide the growth in terms of economic growth. And more importantly, to be able to ensure that it provides also that conduit for the mobilization of savings that occurs through the markets to be able to provide the financing capability for the economy itself. So that is a very important barometer for us, and based on that, let's look at what the performance of the capital market has been like. Is that this one? Okay. The capital market review, let me firstly share with you what the capital market performance for 2014 was like. The capital market in 2014 grew to a level of 2.76 trillion. As you're aware, global market conditions in 2014 remained challenging, and there was a degree of volatility that clearly had an impact in many markets around the world. But despite that, the Malaysian capital market continued on a positive growth trajectory and ended the year 2014 at a level of 2.76 trillion. Within this figure itself, we saw a growth of 1.1 trillion to the bond markets, and the bond markets now remain the third largest bond market in Asia. And this is a very significant development because our corporate bond market continues to be a major source of strength within the capital markets and provides that diversity in the capital markets that many other emerging markets and even developed markets aspire towards. And so we have a very strong bond and equity market in existence that provides a conduit for financing in the economy, and therefore we are very encouraged to see this very strong positive growth in the bond market of 1.1 trillion. The equity market itself ended, equity market capitalization, I should say, ended marginally lower at 2.9%. But of course, as you're aware, the stock market did decline. But despite that, we had a figure which was quite strong at 1.65 million. And overall, the capital market is now 2.6 times the size of the Malaysian GDP. Now, in the next slide, you will see that the financing activity, which I alluded to in the opening of my remarks, remains critical, and we were able to finance 92 billion through the capital markets. Now, this is the third year in a row that the capital markets has been able to finance in excess of 90 billion ringgit of financing for the economy and for corporate capital raising, and the figure was 92 billion, 91.9 billion to be exact last year, of which 86 billion was raised through the private debt securities markets, and we had a figure of 5.9 billion which was raised via IPOs, and this was slightly lower than last year. But if you look at the performance of the IPO market in the ASEAN region, the figure was similarly reflective of a declining trend. And so generally, of course, the IPO markets were lower. If I proceed on, the other part of the point that I made just now was the mobilization of savings. And the Malaysian capital market continued to play a very critical role in the mobilization of savings, and we had this as one of the strongest growth segments in the capital markets, and with a growth of 7.1%, and where the figures, total assets under management today by our fund management industry is at a figure of 630 billion. And this is, again, a very, very encouraging growth. And if you look at the figure over the last 5-year period, that's providing at least, a cumulative average growth rate of about 10.8%. So this is a very, very strong and positive story, which indicates that despite the, global market conditions, our capital market plays a critical role in continuing to finance economic activity, and we continue to see a confident participation in the capital markets to the mobilization of savings in the fund management industry. And as you know, this is the two most important components in the success of a capital markets. So these two figures are very, very important for us to be able to share with you. Now, of course, within these segments, the Islamic capital market is a very, very important component. And the ICM industry has grown to a level of 1.59 trillion. This is a 12% annualized growth rate over the 5 years. And as you can see, there is a positive growth story in the Islamic capital market. We remain the world's largest issuer of sukuk, accounting for 66% of global sukuk issuance. And within this particular segment, we continue to see also a very strong growth in the Islamic fund management industry. Now, all this growth has occurred against a backdrop of course, a lot of global uncertainty. And members of the media, you're well aware of the global uncertainty, so I shan't spend too much time on this. But just to give you a look at the market conditions were influenced by several significant events throughout the year, and clearly the uncertainty over economic performance, as well as the monetary policy actions that occurred around the world, and of course the big impact of the commodity price decline has certainly had a big impact on many emerging markets. And therefore, you can see that overall emerging markets had a decline, particularly towards the later half of the year, and quite starkly around the December period. However, having said that, you will still see that generally portfolio flows over the last 5 years to emerging markets have remained positive. And this is an important point because I will share with you a little bit more about the Malaysian situation. So you see generally positive portfolio flows into emerging markets. However, performance in the last few years has begun to be a little bit more divergent, and this is to be expected because investors do make a distinction between emerging markets, and partly that distinction is made on the basis of strong governance arrangements. It's made on the basis of strong regulatory framework. It's also made on the basis of strong institutional structures, as well, of course, as economic fundamentals. So we are very mindful about that, and that's why the SE continues to place a lot of emphasis on the quality of governance and the quality of regulatory arrangements that exists within the Malaysian market. Now, if I proceed on, the next slide shows you that last year was actually a year which we hit a lot of records in terms of the vibrancy of the market. So participation in the market was very active, and we hit record levels in terms of value traded in May and of 6.01 billion, and in August we hit a record level of volumes traded of 7.67 billion. And the KLCI, of course, also hit an all-time record of 1892 in the middle of the year. And the derivatives market also recorded, a very high level of trading with over 12 million contracts traded. So clearly, in many ways, there was a lot of vibrancy in the market, and this was reflected by these statistics that demonstrate the level of activity that occurred in the capital markets. So just to reiterate, strong capital raising in the market through the 92 billion, strong growth in the asset management industry, 630 billion, and strong levels of participation in the industry through the statistics that show the market's vibrancy. Now, if I proceed on, clearly, of course, as again, you were well aware, And the small cap market actually did quite well, went up to 20% at one particular point in time. But towards the later part of the year, we were clearly affected by the declining oil prices as well as concerns over global growth, which had an impact on the market itself, and there was a slight decline in the small cap sector, and decline of 5.7% in the market. But it's important to put this into perspective, and if you put into perspective, you will see that clearly in the next slide, the figures will demonstrate that over the long term there has been a positive growth in the index. And if I look at the figures in the last 5 years, 2010 onwards, the benchmark index has provided a return of over 38%. And if you take it over the period just after the global financial crisis, you can see that we've had a growth of 101% over the 6-year period. And this exceeds the performance of the MSCI Asia Pacific as well as the MSCI emerging markets overall. And when you couple that with the dividend performance in the market, you can see that overall the Malaysian market continues to provide a stable source of returns to investors. So we do not have the volatility and spikes that you might find in some markets. There is a stable, consistent source of returns in the markets, even from a return perspective. And so this is an important point to be able to make in terms of the performance of the market. Now, let me proceed on by sharing with you again, the bond markets were also influenced by a host of factors, and we had the major factors around expectations of an OPR hike, as well as in the longer term, the demand for investors had an impact on the yield curves. So that was characteristics that we saw in the bond markets. Let me proceed on. The important point here in this slide is to demonstrate to you that that the pattern of trading in the market was such that we had, despite some selling pressure in terms of foreign investors, which were basically rebalancing out of emerging markets in general, we still saw that overall the net inflows still remain at 26.5 billion. So despite the fact that there was some outflow of 6.8 billion in the markets last year, the overall net inflow in the last 5 years still remains significantly positive. So you've had 26.5 billion still in terms of net inflows in the marketplace. And in terms of the trading itself, as you can see in the year 2014, despite some selling pressure on the foreign side, domestic institutional investors provided, or domestic institutional liquidity provided a very strong buffer. Now, again, this is a very important dimension of capital markets. Many emerging markets in the world struggle to create that sort of diversity in their pools of investors. And Malaysia has been able to create that diversity in the pool of investors, where we have a healthy mix of retail, foreign, and domestic institutional investors. And that creates that resilience in our marketplace, which sometimes, as you can see, in many emerging markets does not exist, and that exacerbates the swings in their marketplace. So this is an important point that we wanted to share with you. If I proceed on from here, let me now move to the focus on our initiatives. Our initiatives for the year 2014 in terms of enforcement, regulation, and supervision were basically intended to, first of all, from a regulatory perspective, optimize efficiencies. You know, ESC has focused in terms of proportionality of regulation, competitiveness of our markets, and the empowerment of our investors. And these three strategic objectives continue to have a very important bearing in terms of our regulatory priorities. Now, in relation to the regulation itself, our reform agenda that we had for last year, and it was a very significant reform agenda. Let me go back to the previous slide before this. Our reform agenda was driven with a view to get important efficiencies. Our supervision agenda was intended to focus principally last year on conduct supervision And of course, we took some very important enforcement actions that we will share with you. And we continue to ensure that the ecosystem is governed by proper market and self-discipline through the promotion of good governance. Now, in detail, last year we worked on a revamp of the wholesale market framework. So, beginning 2014, we have begun a review of several aspects of our regulatory framework. This is really important and really intended to provide a major impact in terms of the efficiency for the capital markets. And we have completely revamped our wholesale framework and liberalized the product approval regime. And we've done that recognizing the sophistication of investors, taking into account the maturity of our marketplace. And of course, as you can see, the markets over the years has continued to deepen and mature. And if you recall, in 2012, the IMF and World Bank did an assessment of the capital markets and gave us a score of 92%, which goes to show that we have a globally benchmarked regulatory framework. And the other point, of course, is we are trying to create more business efficiencies, shortening time to market, and of course, being very conscious that we need to be very competitive in the marketplace. So given that, the guidelines on wholesale funds, PDS, Sukuk, asset-backed securities, and the offering of structured products had now been completely superseded, and we have one set of guidelines for capital markets under what we call a LOLA framework. And LOLA is not a member of staff of the SC, but it's an interesting acronym that we use, which means lodge and launch. And if you look at this, what is the consequence of this? The next slide will show you that this means that the time for the approvals have been significantly shortened. In fact, they have been made so efficient that for some, it is purely an immediate lodgement basis. That's exactly how it operates, actually. So this will, again, create a major benefit to the industry. It will create a major benefit to the capital raising framework, as well as for product approvals. And of course, this puts a lot of burden on the SC. It means that we have to enhance our supervision capabilities and surveillance, because we will do greater supervision and post-vetting, but from a market standpoint, it becomes extremely efficient in terms of the approach that we take. So this is a major revamp that we have undertaken last year, members of the media, and the guidelines for this will be actually launched on Monday, March 9th. So you will have it out on March 9th itself. If I may proceed, we also revamped many other aspects of the regulatory framework. We have, of course, created, as you know, a specific framework for equity crowdfunding. We have been one of the first in the region to do that. Of course, many other countries are now following us. But the important thing is that we have created a framework that allows this segment of the industry to develop, and this equity crowdfunding, we believe, will be very important in providing an opportunity for growth to take place, and you'll see a bit more about it later in the slides. We've also reviewed our licensing framework to introduce new categories of licenses, which I will mention towards the tail end. We have now introduced a one-time approval for unit trust companies. We've eased the approval requirements for outsourcing. We have migrated to electronic licenses. All these are designed to create operational efficiencies for the markets. And we've also strengthened our liability provisions in respect to false and misleading statements and disclosure documents, as well as clarified certain aspects of the disclosure documents, and taken, many other steps, including reviewing the conduct standards of capital market intermediaries. Again, all these details are available in the annual report. Now, on supervision, our approach to supervision is governed by these areas. We want to prevent, detect, and create the timely intervention. This is the three very important aspects of what we focus on. And we want to ensure this financial soundness, proper ethics and conduct, proper risk and control, and there is no systemic risk created by any of the firms and institutions that we supervise. Based on this, as you can see, we had a very, very intensive supervision agenda. we had conducted 61 examinations and engagements, 23 on stock and derivatives broking companies, and 38 on fund management companies. We had focused on issues of conflict of interest, sales practices, and client asset protection. We had looked to strengthen market institutions. We continue to focus on governance arrangements in our market institutions, including at Bursa Malaysia, at the Federation of Investment Managers Malaysia, which is the SRO for the unit trust industry, as well as looking at principles for data consolidation and management for the private pension administrator. So we are very conscious that this is an area that under our purview needs constant review, and we've been able to take that on. One of the key things that we've done here, as you would notice, is the fact that we have verified controls with regards to the integrity of Bursa's trading and related systems. And this, as you know, as you've seen in the region, there have been some developments that have an impact on trading, and so we want to be assured that the integrity of our trading system is completely maintained, and therefore we have taken on these verifications and have been assured of that particular position. Public listed companies, we have conducted assessments on thematic assessments on emerging risks on these companies, and we've also looked at greater efforts at earlier detection through scrutiny of our disclosures. We've actually enhanced our corporate surveillance approach, and we will continue to strengthen our corporate surveillance capability in the year 2015. The work of our Audit Oversight Board has been extremely encouraging and has been well recognized, including in the ACGA assessment, where they have said that this is one of the better organized audit oversight regulators in the region. And again, they have been extremely busy, and they have conducted the audits on inspections on 6 major audit firms, which collectively cover 91% of our public interest entities, and as well as, of course, the other audit firms which are based on their risk-based cycle. As you'll see, certain sanctions have been taken post these examinations, which I will share with you shortly. Moving on, the anti-money laundering and counter-terrorism financing has been, as you know, a major area globally, and this is an area that we have taken extremely seriously, and we have worked in terms of the strengthening of this area in the capital markets, and Malaysia has also participated in what has been a grueling assessment by the Financial Action Task Force. And my colleagues who have been involved in this exercise have been totally fatigued by this assessment. But this is a comprehensive assessment, extremely important for the country. And we hope to get the results of this sometime this year. Now, this is the final area is around cyber resilience. Now, we've begun initial work on the assessment on intermediaries. Of course, we've been doing assessments before, but this is an area of heightened risk globally. It is a globally very significant risk area around cyber threats. The SC has begun work on this area, and I will share with you later on today that this is going to be one of our major priorities for 2015, because we are extremely concerned about the global threats from the cyber attacks, which have already had an impact in certain markets around the world. And we want to ensure that the Malaysian capital market has the proper resiliency against any cyber attacks that can occur. So this will be a very important area for our focus, continuing focus in 2015. Moving on, the enforcement area for us is, of course, extremely important, and our work on enforcement is really about reinforcing good conduct through credible deterrence. This is really the philosophy that drives our enforcement work, and we seek to deter, sanction, as well as remediate and provide restitution for investors. And we will use, depending on the outcomes that we desire to achieve in the enforcement side, the range of tools available to us, both criminal, civil, administrative, or other non-statutory enforcement tools. And in the year 2014, as you will see, the Enforcement Division and the other enforcement departments of the SC have taken on, have deployed a range of enforcement powers to be able to deliver credible deterrence We've had 63 criminal charges filed against 2 PLC directors, a CEO and a remisier for insider trading. We've had a conviction and imprisonment term against 2 former directors affirmed by the High Court. We've had 7 million disgorged from an MD of a PLC for market manipulation, 3.7 million disgorged from 9 individuals for insider trading, and these were designed with a view to restitute individuals. 7 individuals were sued for market manipulation, including seeking orders for disqualification of directors of PLCs and barring access for them to the stock exchange. And we have taken administrative sanctions and imposed a total of 200,000 worth of fines. We've issued 77 infringement notices in 2014 for securities laws and guidelines breaches. And of course, we've taken action against 2 auditors and 1 audit firm for the breach of AOB's registration conditions. And again, further details of this are available in the annual report. If you look at it, these are the number of referrals that we've received. Our active investigation activities for 2014 has certainly, kept us very busy. 83% of our investigations have focused on insider trading and market manipulation, and we continue to focus on ensuring that market abuse is addressed in the market. And this is an area that we want to be able to, ensure that we do not have any, market abuse risk that appears in the capital market. So the enforcement posture is very much directed into these areas. Moving on, it is not all about just supervision and enforcement. We also believe that a very important dimension of investor protection is to educate investors. And therefore, investor education is a critical component of our investor protection efforts. And here we have, as you can see, our ecosystem is composed of many different segments. Investor education is very, very important to us. And we reach investor education with a view to create not just education in terms of risks, but also to be able to ensure that investors participate in the market segments. So we've been able to do that. And last year, we launched what is a very comprehensive framework on investment literacy under the Invest Smart initiative. And this is a very, very important segment. And of course, members of the media, some of you have come in during the launch, you are aware of it. We're doing this with our strategic partners. We are reaching out across the country, both using the media, which we believe is a very important conduit, including the social media. And you have some statistics since launch, 39,000 Facebook likes. We hope after this the numbers will accelerate even further. We've had more than 5,000 downloads of the app, and encouragingly we've seen 2.14 million hits on the Invest Smart website. But this is an area that we launched last year. In the first 6 months, it's been encouraging, but you will see the Commission take on a much more focused and emphasize this effort much more in the years ahead. If I proceed on, our development focus has also been keeping us extremely busy. Our intention is to ensure there is responsible innovation in the marketplace. We want to ensure inclusivity and therefore widen access of the capital markets, both for issuers as well as investors. And we want to ensure that we engender an environment of sustainable and responsible investments. And we've done that through the introduction of new products, services, and avenues of fundraising and intermediation. Some of what we've done last year was, of course, our equity crowdfunding platform. We believe this is important because it is to show that there is a breadth of capital raising ability in the market. So whilst we raise 92 billion of funds in the very wholesale segment of the market and for very large issuers, we also provide a conduit for SME financing, and we've introduced a framework on SME investment partners, working very closely with SME Corp, and we've also introduced, of course, this framework for equity crowdfunding. So we want to address the entire spectrum of capital raising. And to ensure, we believe that there is a lot of synergy between the SRI area and our Islamic finance area, and therefore we've created and launched SRI Sukuk framework. This is one of the first in the world that will allow raising through the Islamic capital markets to fund SRI projects, which can be very important for the diversity sustainability agenda. We've also done a whole range of things around several other areas. We've approved amendments to the rules of Bursa to create a single trading right for the derivatives segment. We've approved some products. We've also liberalized the equity ownership requirements for unit trust management companies. We believe the industry is at a level of maturity now that the competition can be brought into the industry, and more importantly, to serve investors. And of course, we've also eased distribution requirements for financial planning industry. And importantly, for the financial planning industry, we think this is a very, very important area for future growth because it's a very important advisory business. And for this, we are working with the industry to establish a 3-year plan to accelerate the growth of the financial planning industry. So this is something that we will be working on. Governance will always remain on the agenda for the capital market regulator. And last year, we were very encouraged that the industry, particularly the institutional investors, working together with the Minority Shareholder Watchdog Group, were able to launch a very important area which we identified in our corporate governance blueprint, and that is to create a stewardship code for institutional investors. Now, we are the first in Southeast Asia to do this, and the second in Asia after Japan, and one of the first in emerging markets. And this is very, very encouraging. This has had very strong feedback, and people see this as a very important development to have institutional investors codify their work in terms of seeking good governance in companies that they invest in. Diversity is an important agenda for us, both in terms of gender, age, and ethnicity, and you've seen us have a role working with the stock exchange on creating disclosures for PLCs in this area. We think where the industry feels there is a need, integrated reporting can play a role to provide more holistic reporting, and we've therefore facilitated this with the industry. And of course, as you know, also there's been an ESG index that has been approved and launched last year following on from the budget announcement. Overall, Malaysia receives very good ranking in corporate governance, and we were identified in the ACJ report last year as the only Asia-Pacific country that has consistently improved its scores across all surveys. And so this is an important effort, and of course it's a testament that not just the SC, but the industry players also driving corporate governance, the culture of good corporate governance. If I move on, the private pension administrator, together with the SC and the providers, continues to work very strongly in the development of the private retirement schemes area. As you know, we introduced this fairly recently, a couple of years ago. This is an extremely important segment of the capital market that is still growing. When we look at its performance relative to many other markets, it's quite reflective of the growth pattern, and we believe that there is a very strong opportunity for this area to become an important segment of the investment management industry, but more importantly, to play a role in terms of providing a platform for retirement savings for Malaysians. And the figures at the end of 2014 was 716 million in terms of assets under management and 128,000 number of accounts. The most recent figure we've given you up there in the pink box is 785 million and 134,000 members. Now, this is a pretty good and encouraging performance. A lot more work to be done, but it's an encouraging start for a voluntary system. Importantly, I want to share with you that the youth participation has been extremely encouraging, and after the incentive that was introduced by the government in the budget 2013, or if I recall correctly, on youth incentives, we've seen youth participation increase it's budget 2014 actually, and we've seen youth participation increase from 7% in 2013 to 22%. Well, this is a pretty good participation by the youth. But again, lots of work to be done, and but it is a very important start and remains a very significant area that the SC will watch very closely. Moving forward, the Islamic capital market, lots of work has been done here. We've issued an SRI Sukuk framework. We've issued Sharia parameters on Islamic exchange-traded funds, both based on gold and silver. And this is one of the first, Sharia, parameters for funds that we've introduced. We've also facilitated the offering of the Islamic funds in the cross-border links that we have with Hong Kong. As you know, we have a mutual recognition arrangement with Hong Kong as well as with Dubai, and this is very important. And we've also published our Sharia resolutions to create more transparency and harmonization for cross-border Sharia standards. And Waqaf is an important segment that we work closely with the Waqaf authorities and to ensure that the capital market can provide an avenue, if they so choose, to be able to develop Waqaf assets. Moving forward, we have also established the Capital Markets Malaysia to promote the Malaysian capital market. The launch will occur, this year, and the idea is to create a holistic positioning strategy from all the feedback that we've had from the industry. It is clear that there is a strong feeling that given the successes of the Malaysian capital market, the largest bond market, the third largest bond market in Asia, the largest mutual fund industry in Southeast Asia, largest number of listed companies in Southeast Asia, and the largest sukuk market globally, we have a very good story to be able to tell. But and therefore the holistic promotion of this capital market becomes very critical. And this is something that the industry task force has suggested, and we have worked on. And so we work very closely to promote the Malaysian capital market, to create more opportunities for growth as well as for international participation in the capital market segment. So we will have more of this in the ensuing years. But this is now established, members of the media. The next slide shows our agenda for 2015, and I'm going to be very brief on this because we will share more of this when we have our press briefing to you next year on what we have done. So this is to give you a flavor of what we are doing for 2015. As you can see, the 2015 agenda is a very busy one, and I'm sharing with you some of the highlights of this. There are many other things that the Commission is working on, but we will develop an Islamic fund and wealth management blueprint to further grow and position Malaysia's Islamic capital markets. We have a strong leadership role in the Islamic capital market. As you're aware, we're the only country in the world that licenses Islamic fund managers. And we believe, given the encouraging growth that we've seen, that we have an opportunity to further strengthen this area, and therefore we will provide a holistic strategy on the growth of Islamic fund and wealth management, which we will be working on this year and hope to be able to share by the end of the year. We will continue to broaden sources of financing and create scale across different market segments. We believe there are many opportunities in the capital markets that can be developed further. The fund management industry, the funds segment, the financing avenues, as well as in the area of the derivatives markets and the OTC markets as well. And these are areas that the SC will continue to work on to ensure that we provide the broadening of financing avenues and continue to be able to build scale in the market segments, and of which one of them, of course, will be the private retirement schemes area. We also are going to do a review of the industry cost structure to look at it from the perspective of industry competitiveness, but also from the perspective of investors, and to ensure that investors have fair and appropriate pricing entry points into the capital market. So we're going to look at this area. It's not an easy area to work on, but we have embarked on a review of this, and we hope to be able to share the findings by the end of the year. We also are going to focus on industry talent and capacity building. We have created a completely new strategy for our Securities Industry Development Corporation, which will be implemented in 2015, which is intended to build capacity. The capital markets growth is going to be dependent on the talent and capacity within the capital markets. And therefore, we are going to work very closely with the industry. We've already introduced several initiatives like the GRP 1000 for dealer representatives, and we are going to widen that, and we're going to work on other initiatives to strengthen this particular segment. As you saw just now, we did a review on the wholesale market. Now, this year, we're going to be embarking on a review in the retail area for funds. And that's going to be a major piece of work that we're going to do, and we're going to look at the retail funds area, and we hope to be able to provide certain announcements of that in the later part of the year. And from a standpoint of cyber resilience, we want to highlight that this is going to be a very, very important area of focus to us to ensure that the industry has an appropriate strengthening in the cyber resilience area itself. And let me now sort of finish off by saying to you just some impending releases to demonstrate that, what is going to be rolled out. Lots of things, but just a quick snapshot. Our guidelines on unlisted market products will come out on Monday, as will the guidelines for venture capital and private equity, which is part of what I said just now, deepening market segments. So we will come up with a list of guidelines on private equity. We will introduce members of the media a framework for boutique fund management companies. We believe, given the growth of our fund management segment and given the opportunities available, there is a potential a strong opportunity for boutique fund management companies to establish the operations in Malaysia. So we will launch that in the middle of the year. We will look at intermediation to enable new models for dealing in OTC as well as listed securities in the middle of the year. And so you will see much of that once these things are announced. We are going to expand the range of services for fund management companies. We are also going to liberalize requirements to allow registered persons to enable client servicing and marketing for fund management companies. And we will widen our GRP program even more to all market intermediaries. We shall issue fund disclosure guide and a framework for evergreen prospectors as well as tiering of fund applicants. All these three relate to efficiencies in the fund's approval process. And finally, we hope to be able to have our blueprint on Islamic fund and wealth management released by the end of 2015. So I shall pause there. Thank you very much, members of the media, for your support throughout the year. And we are happy to take some questions. Thank you.